Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrina with The Street, and together we bring you the morning call. Welcome to some slow summer trading. So last week, Friday was a real powerful move to the upside, regaining a lot of those losses from earlier in the week. But rather than just looking at that, because we essentially ended flat, let's take a look at what the charts have been doing on a weekly and monthly basis and try and establish some patterns here.
Well, first things first, you mentioned summer trading, slow things down, thin it out, because last week we had like the Super Bowl of all weeks.
Right.
You had the Fed, you had ECB, you had jobs, all those out of the way. And when push comes to shove, we were down Monday through Thursday, but on Friday, we took it all back. So like you said, if we take a first look at the chart here on the daily, you will see that, this was the end of the week. We ended right at resistance. Yes, we were down 4 days in a row, and it felt like everyone was so bearish on the market. And then on Friday, we were opening up before the jobs number, and then after, it powered to the high. So right now, this is the direction controlling the tape. And as you can see, we're also coming right into, where we broke above, this little downtrend, actually right around here. So at this point, there's really nothing in the way until about 1405, 1422, and the path of least resistance, I think, is to the upside right now.
Well, and I agree with you 100%, because you know what, too? We also have Europe is essentially on vacation, so we have less headline risk there. Everyone that, our politicians in D.C. are on vacation for the next 4 or 5 weeks, because we have nothing going on here that needs to be fixed. So a lot of the trading is really going to be predicated on, core fundamentals and charts, because we have so much of that headline risk out of the market.
And with most of second quarter earnings out of the way, you have a now new list of have and have-nots.
Yes.
And in these haves, we've been talking about in the last week or two, ever since earnings, there's been a good crop of stocks that are holding up, going higher. Every down tape, you buy them first, they go positive first. But before we get into that, you take a look at the weekly chart of the S&P, you'll see you have a weekly wedge type pattern here that we closed above, which is technically very bullish. And you still have, since remember that October low, you have a higher low, higher low. So we are trending higher, climbing this wall of worry, this wall of doom. And really, your next big level here is the old highs of 1422. And I think there's a small shot before Labor Day, we'll be talking about, oh my goodness, we're right back at these highs. What are people who are flat going to do in the fall, and are these bears finally going to throw in the towel and cover?
Well, the whole thing is, I mean, fundamentally, if you don't really agree that the market's making that consistent grind higher, it doesn't matter. At the end of the day, whether you like it or not, for whatever reasons you have, you really can't fight the momentum on this one. But anyway, moving along to our sector spotlight, we're going to take a look at the have and have-nots, the healthcare sector. Typically, we talk about this in the tech space, so we're going to show you guys a couple things that we haven't reviewed in a while. We're going to kick it off with the XLV. This is a really good-looking chart if you want to get in maybe a little bit earlier.
Yeah, well, we showed the chart of the S&P, which is about 2% off the highs. This is ready to make new highs. So what we call that in technical land is relative strength. So relative strength is a place to be when you want to find the fastest moving winners. And I typically don't trade this sector very well. It's not, it doesn't move as fast, but when you look at the actual ETF of the group, you will see that if you were an investor in this group, you're doing very well. You're above the 21-day, the 8-day, and you're near the highs of this overall move. So as a whole, if this ETF were to get above, just say 39.90, you go to your weekly chart and you will see that you are on pace for another breakout in this group. There are names you could hold here as a macro investor, and every now and then you can find a trade as a trader.
Well, see, now I think a stock like UNH, which we're going to take a look at, could be one of these trading vehicles that's had a little bit of a problem hitting, holding composure when you're looking at the lows here, but it was up 1% on Friday. So this could be one of these names where you could get cute, as Scott would say, and do some short and long quick plays here.
Yeah, well, this one is not showing much technical strength, but as a lower tier play, it's not your problem yet. So we've talked many times on how do you enter a laggard stock, and then how do you measure whether you should stay with one. And if you look at the chart here, it's been pretty battered. And ever since this 3-day down move after the news that came out on this overall space and this outside reversal, it's been just trending lower. There are some people that think some money will come in here in the fourth quarter. So if you want to trade it versus the lows here, here's your low. This low right there is about, what is that? The low is 50.32. So I think it's fair. My guys are probably not going to be looking at this, but as an investor, if you want to buy in the hole instead of chasing momentum, here's level 1. And if it gets finally start getting above, I would even say here, this 54, that means it's reclaiming the 200-day, it's reclaiming the 21-day. Perhaps it acts a little bit better. But overall, I still think that this has a lot to prove. But if you're looking at this group, trading versus level, might give you some cute cash flow.
So now here's an interesting one. We're going to take a look at Cigna. This kind of reminds me of the ag plays that we've been talking about, where we got in nice and early, and they've just been explosive. One of my favorite analysts, and I know we're not exactly fans of analyst and market timing, but Dave Shove over at BMO, I've been following him for years. He really understands the space and is calling this, just upgraded it to outperform, and he still thinks it's a growth story. When you can kind of get these growth story upgrades, not just because they reported great earnings, let's upgrade it, and get in early, I think there could be something here fundamentally and technically.
Well, half the battle is actually trusting an analyst, and if you trust this guy, that means I trust this
guy.
Yeah,
I think he does some good
like
work.
family over here. So I don't understand the fundies of healthcare that much. So I'm going to look at the chart and see if there's anything here as well. So if you look here at the chart, you will see, Cigna did hold long-term support right here, put a small double bottom. You did have I'd say a pretty feisty move off the lows for a healthcare stock, and now it's holding higher. So at this particular point, we want to measure commitment to that type of move. I think as long as it stays above this 4130, goes a little sideways, you could see a lower level trade that could gain a little bit of momentum. So 43 is resistance. If you want to buy, if you like this analyst, and I'd say you have to have a really long-term time horizon, buy a little bit here and then above 43, it could contend with that 200-day.
Now moving along to Aetna, this one's been in a downtrend for a while, but we saw some really bullish options activity on Friday following a favorable court ruling in an Ohio court. So this could be another one too, where if you have the uncertainty out of the way, there might be something to do here if you get in early.
Yeah, well, technically it doesn't really look good.
Right.
But again, you look at it, you start making sure that things start to line up, and if you're not in Aetna right now, it's really not your problem. If you saw some sell signals and there are multiple sell signals along the way here, now there's an opportunity. You could always buy it at the right time and sell at the right time. And you look here at Aetna, you'll see this was a nice, I remember actually talking about this with some of the traders when it had a really nice breakout above this consolidation, and then you had this like outside day gap down and it never filled it. So even if you were still in there, you said, okay, let me get out of the way on this gap down around 46, and it's been just trending lower. It's 10 points lower. You now have this, somewhat of a downtrend here, or a descending channel. So at this point, if you want to trade it, again, I don't understand these things so well. I'm not that smart. But here you have this low of, what is this? This is 34.58. It's coming off that. If you want to be long versus that level. And at some point, if it starts to break this descending channel, you might see some better action here. And that would be, it would have to start really getting above, just say about 38.50. And then hold there. So these charts are definitely faulty. This group has a lot to prove, but if you have a thesis and you like it longer term, maybe tier one if you didn't get caught in that down path.
And let's wrap it up with health. Now, this one had a really tough quarter. What's tough with this group too is that healthcare costs is really a big concern, and this one just got beat up in its quarter because the costs are clearly out of control.
Yeah, this one, it opened low and didn't close on the lows. That's about the one, healthy thing.
Right.
Health nut about this nutty stock. Anyway, you look at the chart here and you'll see a massive hole right there. Boom. Didn't even think about, filling that, so it's controlled the direction to the downside. This gap down looks a little bit different than this one. This one couldn't go green. This one gap down again, came off the lows, trying to price in whatever that news was. So if you want to give it some time here, watch this level here that it I think traded off of, which was about 1665, and then if it goes sideways, maybe you get a cute little trade to fill this gap. But if this can't fill this gap the same way it couldn't be here, you probably have to go to your weekly chart, and your weekly chart shows the next real level of support isn't all the way until about down to about $15.
Yeah, I'd probably put my money in and look for some other trades elsewhere. Going to jump into a quick commercial, and when we come back, we dive into the trenches.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Welcome back to the morning call. We're going to dive into the trenches and take a look at the social media names. And I don't know about you, Scott, but these have not been friendly for traders and investors alike. Let's kick it off with LinkedIn, because I would think probably the best house on a bad block. But even still,
What's funny is I've been very bullish on LinkedIn, and I've tried to be, and it's so hard to fight the negative social sentiment. And even like everyone was scared out of the stock because of the way Facebook's been acting, but really that's just the third quarter now that LinkedIn came out, met or exceeded the estimates, and acted very, very well. One of these times, these shorts that are in LinkedIn are going to get squeezed, and there are some technical levels that are showing their face. And if you're a macro investor in this stock, you know what, you have a tough tummy because the gut checks that this stock has had and the sloppy nature because of the group has been hard to deal with. It's gotten me out many times. So at this particular point, you look at the chart here, LinkedIn, you will see this company came public. You know, it's been what now already? About a year? Okay, so it's come out, it's proven itself, it's in a lot of institutions' hands. As you see this nice big channel here, so to speak, it gapped up on earnings and closed really strong. This 110 area is big. If you take a closer look here, I would love to see this just go sideways a bit and maintain its composure above this 104 to 106, and I think traders are going to be all over this trying to get a nice trade above 110, and then we could see the highs on the year. You go to your monthly chart on LinkedIn, and it looks really good. It looks really
exciting chart.
Now look at this, and most winners come from recent IPOs of the last few years because there's not a lot of shares out there, the whole spiel. Well, anyway, you take out this earnings day out of the way, 110 is a huge level. It gets above that in the coming sessions, and shorts will get squeezed, and funds are going to have to start buying it.
Moving along to Facebook, our latest teenager in the group. This is just completely unbelievable. Not only is it like an IPO type of thing, it's just all about investor confidence and the lack thereof. This is an identifiable name. Like my mom is on Facebook and she has friends. I'm surprised she hasn't friended you yet, but but this is just there's so much to the story just outside of the chart. I mean, it's
well, there's a lot of mess ups going on here. Okay, the investment bankers were just pigs. They opened it up at 42, went to 45, and then it didn't find a friend. Hate to use that pun again, because you can't really have a stock with a $100 billion market cap that does $4 billion in sales and not even $1 billion in revenues. So all it was the investment bankers just keep marking it up every round to try and get their clients and get them comfortable that they're making money. So it actually had like a public life in the private group, because it went from like 4 to 38 before you were even allowed to touch it. So PS came public, acted horrendous. It gave us one nice technical pattern that failed. Yes, I know it failed. They got stopped out of 30.50 and lost a point and a quarter. But at least if you used your discipline, you saved yourself a lot of pain. So let's fast forward where we are right now. You look at the chart. This was IPO day. Pow. This is when it started to roll off of the lows. Remember that little red dog reversal right here? And then you had a nice little break above that 38.10. And this is when I did the segment with Kramer right here, when it actually looked as if it was trying to go sideways. So if you take a look at the chart, because charts change right here, this was looking pretty good, but the past tense was, and this is why we had to stop here at 30.55. Once we went below 30.55, this cup and handle pattern changed. And then look what happened. Pow. All right? You got out of the way. And now the question is, what do you do here? You have a small little double bottom. This is 1982. That was a good year, actually. What was I? I was in maybe 7th grade. Anyway, no.
No, because we're the same age.
82? 6.
We can trade, but we can't do math.
There you go. So anyway, you go back to Facebook, and here we are in 1990. I remember that year. That was a different year, college year. Anyway, or high school.
High school.
P.S. It's Monday. We're trying to laugh here. It had a decent bounce. I think some shorts got worried when they saw that they couldn't sell off LinkedIn. So now this is the levels that guys are going to be trading against. No big deal. It's not very compelling. I am actually a little bit long. Intraday gave you a nice little pattern when it did cross above this area, and this was 2084 before coming down. So now we'll see if it builds a new level above 20, because once we got here, every single person, and probably your mom, said, oh, I heard Facebook's going to 15. Well, once everyone says it's going somewhere, it usually goes the opposite way. So now traders trade versus 1980 to 20, and maybe you can nickel and dime it in this range, and then we'll see what the next direction is.
Moving along to Zynga, clearly this is a really correlative name to Facebook because it's completely contingent on if Facebook does well or not. I mean, this would actually be an interesting stock if like an IGT or Win took a look at it, one of the electronic gamers. Other than that, I mean, why even be a standalone company in the public market? What, to gain access to the capital markets? Other than that, there's really no model.
Well, Zynga made a lot of people rich besides investors aftermarket, because every sell-side guy, again, said when Facebook comes public, this will be 20 bucks. And as the street was buying it, the insiders were actually able to sell it. You remember that secondary at 12 bucks? You know how many people on the inside sold that stock, and people just tried to ignore it because there was such a hype, and the hype around Facebook was so big and it was so disappointing? So, and I actually got caught. I used a lot of discipline and still lost money trying to be long it. And every time it broke a technical level, I'm like, wait, guys are saying this thing's going to 20 bucks. Meanwhile, it was breaking below 12. It was breaking below 9. So anyway, you look at the chart here.
Another well-priced issue from Morgan Stanley.
Right. Just, it's amazing. The thirst for business and the lack of putting things together. Anyway, this was a nice little buyable strategy when it went above the IPO high right there. Here's a shooting star top. It couldn't even be more blaring than this. And guys tried to ignore this, saying, oh, but after time it'll be fine. Here is really where you had to be stopped out, right when it broke below this little pivot level. So this was right around, I remember this level very well, right below 11.25. That was after the secondary. And that's when I said, I'm done with this stock. I don't care what people say. Took a little bit of a loss, and but a lot less of a loss than what's gone on here. So now at this particular point, it's at 272. What do you do with it? Absolutely nothing. Okay, if for some reason you're not in it, you never bought it, and you didn't get zinged, maybe at 272 you buy a little bit, because at some point it's going to have some kind of takeover talk, like you said, IGT, something. Someone's going to come in there, the valuation will get cheaper, but it could happen at $1.50. So at this point, 272. Wait for some type of igniting type move to trade it against something, but I wouldn't be in any rush to start buying this thing.
Well, let's wrap this up on a good note and take a look at Google. Another fine quarter. This company, as big as it is still growing. What's really going to be key, in addition to the social media aspect, is also the tablet market, which we'll be looking at through the back to school season and into Christmas. But this one, I think it's still looking good. I mean, you've been trading that really actively, especially over the past week.
Well, I've been talking about it actively. I haven't been trading it as much. And in January or December, I looked at the chart, I looked at the weekly, the monthly, and I put this as my high beta tech stock of the year with Walmart, with my mega cap special, Microsoft, and everything's been working out for investors. And then you have investors and you have traders. For this one, it started off faulty. It had two misfires where it came out with bad earnings and it came in, but every time it was supported by institutions. So it almost got like 2 free passes as they've been putting all their businesses together. And now if I look at it again, a lot of guys like Red Dog, I got stopped out at the 200 day. What do? I was like, okay, we just had good earnings. Let's see commitment. You could be a buyer at 618 to 620. And like, okay, so if you look at the chart, I'll show you what I was talking about. First of all, this was this year. This is when it tried to break out and failed. Okay, so I remember I was long into December, had a nice 30-point move, sold some, kind of got lucky because I don't take things into earnings, and you had a big move lower. Here's where it closed out there. I took options because I take options in earnings, usually not stock, and they all went worthless. Big deal. A little bit of a tactical play that didn't work. Since then, though, we've held going across 550, and now this time earnings came out and were good. Okay, it went above 600, stayed above there. So for those who needed to re-enter, if they didn't hold, this was your spot. This was 618 to 620, broke above. And since then, it's been, just hanging out above it, a little sloppy to trade, but it closed at 641. I think the next point of reference here is what? This is 658, and then you have the highs of the year. I still think that this stock will be 700 plus at some point this year. You look at the weekly chart, and let me show you the monthly chart. Stock put its highs in 2007 when it was just search. We are now talking how many years? Because we've already figured I can't count.
5-ish?
5-ish years since,
4-ish?
And we're getting nice and nice and nice. Did I say the word nice? Yes, nice and tight right here. So if it starts to get above and really stay above like 650, your next move is to retest this 700. The high here was 750. And actually, if it probably gets up there, it goes to 800. It might not happen in the fourth quarter, but it could happen anywhere within the next 12 months.
All right, speaking of tablets and growth, let's move to quick hits for quick cash and kick it off with everyone's favorite stock to trade, Apple.
Okay, well, Apple, I'm just going to go through quickly. You had your buy at 580.80. Now it's hovering between 618, 620. A close above 620. I think it opens the door for 644. Real quickly at the chart, you take a quick look here, you will see this is when, gap down on earnings. Here is when it recrossed that 2-day little range, and that was your buy above 580.80. Since then, a pause at big time resistance, and now it's hovering again. I am long it. I got long in this little base here. I think above and close above 620, you then get 644 pretty darn quick.
Moving along to Knight Capital Group. This is another name like a Facebook where people understand trading. They get it. They can identify with it, and we have another trading debacle. Like, we need any more issues with investor confidence, and that's what makes me think of Facebook. When I think of a name like Knight, they got the $400 million cash infusion this weekend from the converts through Jefferies and, what was it? Jefferies and
like
TD. There's a conglomerate of these. But one of my traders on Chat in the Street did the math behind it. With tangible book value, when you take out the converts, it's only about 280. So yesterday, Friday's bump, it's still overvalued.
Okay, well, it closed at 405 on Friday. Now it's trading at 250. So they priced this thing very deep in the hole. So anybody that chased it, or anyone that covered, or actually not covered, anyone that got long on Friday thinking they're going to get a deal and they're going to make money, well, they got a deal, and if you understand trading, they're going to lose right here. But anyway, if you're not in from Friday, now it's a little interesting because, like you said, you know, the tangible and the this and the that. P.S. I think if you're not in it and you have a long-term plan, between 250 and 280, if these guys that raise money, they stick there and they try and support it. There's a huge amount of shorts in this name also because they thought it would be a zero.
Right.
So right now it's not a zero, it's $1.50. So we'll see what level we hold. You know, I don't think it gets down to $1.50. You know, to get rid of all of the goodwill there from the money raised. But I think 2.25 to 250. I'm going to look at it today and see if I could buy it versus that level. Maybe it goes down and tests around $2. But at this point, I think, you know, anywhere between 2.25, 2.5. Buy it a little bit and put it away. It's going to take some time. You probably make some money from this level if you haven't been caught.
Well, it's definitely more properly valued than like a Facebook secondary at 12. I mean, because this is really where the thing should be trading. And again, at the end of the day, I don't think Knight's going anywhere.
Zynga.
Zynga.
Yes, there you go.
I did. It's Monday. Give me a break. Knight, they make markets in 19,000 U.S. equities. They're not, I mean, I think they're going to be around versus a Zynga. Anyway, moving along to Goldman Sachs and trading.
Yes. Well, Goldman Sachs, nice move off the lows. 5 days, just rested, 101 to 102. If Goldman can get above that area, I'll show you real quickly. That's going to be good for the banks. You know, it broke above this channel, retested it, it's fine. Right now you see a nice little level here. I think my guys will be buying Goldman Sachs if it can get and stay above this 152 area, and that would probably be healthy for the banks. And if you look at FAZ real quickly, you know, or FAS, I'm sorry, you will see there's a nice level here at 92.5. So if Goldman starts to break above 150 and the FAS starts getting above 92.25, this will help the rally in the market.
Yeah, oh, and pay attention to the banks today because we have Bernanke speaking at 9, so you might see a couple of headlines coming out of there. Let's wrap it up with Starbucks. God knows I need some caffeine after this.
Yes, this is a long one. I did go long Starbucks, first on Thursday versus the low. And it didn't really have a powerful move, but it never broke that low. So I stayed, I added on the close, and I think that Starbucks above 44.20. You look at this chart right here, you know, I wasn't caught, I'm in it. It's a laggard type play. A lot of people are like, Red Dog, you know, usually you play the leaders, not the laggards. I'm like, you're right. Anyway, the low here was 43.04. I bought some. I think that if it could, you know, this pattern actually, I look at this, doesn't look great. Above 43, 44.20, perhaps we get a nice Q trade to retest, you know, this 45 half 46 area, which is a nice tactical long, especially if you weren't caught in this, you know, debacle all the way from 62 down here. And lastly, I don't think it's on here, just people were asking me this morning about LVS. Do you guys remember we talked about the capitulation if you sold it here or stopped out there? That day when you saw it have the volume come in right around this 35, you saw a capitulation, went long, nice little move, a little bit of commitment to it, and now it's on its way to 40. So nice little lower level tier trade. I just want to show you the volume that was in there because a lot of people say volume needs to happen in certain things. Well, look at the volume that came into LVS on this day, earnings day, a lot of shorts covered. Nice tactical long for those that did not get caught and stay involved in this downtrend that came into play since the highs.
All right, guys, have a great week trading. And tonight, if you've not signed up already, have the chance to meet Scott and myself and a bunch of our colleagues over at Real Money and David Peltier at Stocks Under 10. We also have a special guest from the SBUX, which you guys are registered. So, and catch Scott at the end of the day, every day on Real Money, Options Profits, and T3Live.com as he wraps up the charts.